Hey everyone, this is James Anadon. Today's Thursday, February 27th, 2020. I wanted to do this video earlier this week. It's been a pretty busy week, as I'm sure you're aware. And if you're not aware, the market has been experiencing a pretty swift correction. So the purpose of this video is to, number one, give our input on what's driving the current correction. And number two, what our current plan is for dealing with this situation. After market trading today, I went through and adjusted the numbers, but I looked at the S&P 500, and since its most recent all-time high, it's currently down about 12%. The NASDAQ is down about 9% from its most recent high, and the Dow is down about 9.5% from its most recent high. Now, these numbers don't seem outrageous. They're not anything to be worried about. But what we need to do is understand what's kind of driving this. But number one, before we do that, I want to make a quick explanation on what, in quotes, the market is. And the market is a forward-looking indication of future economic activity. It's as simple as that. Another way to say that is, in other words, the market is a voting machine in which prices are a reflection of net aggregate opinion of all market participants on all subjects on all time frames. This doesn't mean that we have to be correct, but what it is we're taking all the information that we have available to us and we're trying to translate that into what prices of the market should be. It's simple as that. Because the main culprit of this market sell-off is the fear that corporate earnings is going to be hurt pretty significantly because of the coronavirus, is the reason really moving these markets towards the downside. And the reason for that is because market participants don't like uncertainty. It's impossible to price uncertainty. So that's when we start to see some of these swift market sell-offs. The coronavirus in and of itself does have the potential to really cause a disruption in the supply chain, meaning because U.S. companies heavily rely on Chinese manufacturing as well as other countries outside of the U.S. for goods that they sell, the lack of sellable supply may cause corporations to earn a little bit less. And so right now, what we're seeing in some of the headlines is companies such as Goldman Sachs believe that corporate earnings might see a 0% increase this year. And that's what's causing a lot of this pullback and potential downside that we're seeing to the market. Now, the current market environment is within all of the technical levels. We haven't fallen outside of the technical levels yet. However, what we are doing to kind of protect against that is a fewfold. Number one, our strategy has never changed. Right, we have the core of portfolios, and then we also have what's called the tilt portion of the portfolio. The tilt portion of the portfolio can be anywhere between 25 and 40% of your portfolio, but what that is meant to do is give us the opportunity to make quick decision sells on the portfolio so we can use the cash for other things such as hedging, like purchasing gold or even purchasing short positions. Or just simply going to cash or buying, fixed income bonds with it. At this point in time, we've started to hit some technical levels, and so you might see some selling going on in your account. We always set stop limit orders on all of our positions when we purchase them, and we go through on a periodic basis and change them. And so a lot of these sales that you might see are not really coming from us. It's coming from what we have strategically set up in the beginning. And so our strategy has not changed, and neither should your strategy change. We need to remember that as investors, we are long-term. We have a long-term time horizon for most of us. Some of us not so much, or at least they're a little bit different. And we need to make sure that we continue to stay with our goals and what we're working for and working to. The changes within the portfolio, the first thing that happens is we look for the weakest stuff. We start to pull back on that. That gives us some dry powder to come into the markets when we do see a change, and if we do see a change. I don't want to downplay the coronavirus at this point. There's a lot of uncertainty around it. As you can see, it's been a big kind of a weight on the shoulders of the market. We just came out of having a really difficult time with China and the trade war, and Trump has made that situation a little bit more difficult and better and things like that. But what we want to do is make sure that we keep our goals on the forefront, and we just need to be strategic about our decision making. If you guys have any more questions about your current portfolio, your personal portfolio, please let me know. You feel free to set an appointment with me. We can have a conversation. I'd love to give you some more of my input, kind of what we're seeing. Every single day is going to be a little bit different. I suspect, as time goes, we're going to start to see a little bit more of, what can happen, and the difficulties of that this coronavirus can actually bring on. In any event, again, please feel free to send me an email. You can even click on the link in one of my emails to set an appointment with me, and we can talk a little bit more about your portfolio personally. Again, I'm James Anadon. Thank you very much for your time. Talk to you soon.